On the program today, credit ratings agency Fitch lowers Ghana to restricted default after missed coupon payment on Eurobonds. And cocoa supply disruptions in West Africa lead to spike in global cocoa prices. China to extend zero-tariff treatment to Ethiopia, Niger, and Burundi. Hello and welcome to Business Incorporated. I'm Will Ibang. As always, let's check in on the market, starting with Africa, where sentiments were mostly negative at intraday. The NGX was trading marginally lower at 0.03%, while South Africa's JSE tumbled more than 1% there. Meanwhile, in North Africa, Egypt's EGX30 rose marginally by 0.02%, while we saw Kenya's close for Monday down in red territory, down almost 0.8%, there's 0.7% in red territory, but that's for Monday's close. Now we'll check out intraday activities at the NGX. We want to know what stocks are moving and shaking the market. At the moment, we have Azizat Awunuga, securities analyst, Parthian Securities Limited, to share our insights with us. Good afternoon, Azizat. How are you doing today? Azizat, can you hear me? Okay, so we move on to Middle East, where sentiments were negative at intraday. We saw the Abu Dhabi index down 0.42%. Dubai was also down 0.4%. Well, look at still within the region, Saudi Arabia and Qatari were not doing any better. They were down 0.71% and 0.21% each. Now, we're going to get back to NGX, but before then, we'll look at what's happening in Europe. Looking at the Russian invasion of Ukraine has touched almost a one-year mark now. Many things are on the agenda. Fresh sanctions, continued ammunition supply and support, as shown by U.S. President Joe Biden's surprise visit to Kiev. And we're going to talk about this and how the war has impacted the German economy. We have Warder Imran with us from Deutsche Welle in Berlin. Warder, Germany suffered because of its dependence on Russia for energy. I want to know how much Berlin has spent on this war.
In 2022, last year, the war cost Germany 100 billion euros, or 2.5% of the country's GDP. That's not only the Ukraine war, but also controlling the rising energy prices that made it very difficult here in Germany and in Europe to do business or even keep homes warm. The German Institute of Economic Research said that the 100 billion euro number was only from February 2022 onwards. Looking at this in the bigger picture, the institute forecast that the war and its impact would cost Germany about 4% of its GDP by the end of 2023. That's about 160 billion euros, or 2,000 euros per resident from the start of the war. One of the main reasons for the cost is definitely the energy prices that haunted Germany. There could be damage to Germany's standing as a business location if companies do not speed up efforts to use less energy and embrace digital and economic transformations. That's what the head of the Economic Institute warned. This data is being discussed at the same time as new sanctions.
Talking about sanctions there, the US is planning a new round. So is the EU. Can you tell us more about that?
It appears that US, Europe, and other allies are still committed to doing whatever they can to weaken Russia and stop these attacks on Ukraine. There is chatter that there are people or companies evading these sanctions within the European Union. The Dutch foreign minister only yesterday gave a speech and said that there should be a sanctions headquarters made in Brussels where there can be proper checks to ensure that sanctions are being followed. A report by the Financial Times also suggests that the European Union may be tapping into EU budget to finance weapons and ammunition for Ukraine. Traditionally, the bloc's treaties forbid spending this money on military purposes. But it seems the EU is unable to provide and produce Ukraine with sufficient ammunition because Kyiv is consuming it really fast. If accepted, the funding plan would be an echo of the COVID-19 plan. Ursula von der Leyen, EU Commission's president, said the bloc is considering options to jointly procure standardized defense products, such as ammunition.
So away from that now, give us an update. What is happening in European markets?
PMI data is expected to come out today for France, Germany, and the UK. Investors and traders will be looking for some direction from this data. Last month's PMI indicated a weak pace of contraction. That's good news. Backlogs of work declined and employment growth was slightly better. I reckon investors and major players are waiting to see the PMI results to see if this trend continued. Also, an Austrian lender, Raiffeisen, has come under fire for reportedly continuing business with Russia despite heavy sanctions. The U.S. Office of Foreign Assets Control sent an information request to Raiffeisen to clarify payments and businesses. All this led to shares in Raiffeisen to drop by 7.4%. That's the worst daily performance by Raiffeisen since the start of the war. BNP Paribas analysts downgraded the lender's performance from outperform to neutral after the news came out. And outside of Europe, investors' focus will be on the U.S. Federal Reserve meeting minutes that are expected to come out tomorrow.
Thanks so much, Warda Imran from Deutsche Welle there. Now we'll go back and take a peep at the intraday activities at the NGX with Azizat Awunuga, Securities Analyst, Parthian Securities Limited. Azizat, what's going on there at the NGX now? We're seeing marginal trade in negative territory for the NGX. What's driving this? What stocks are moving the market at the moment?
All right, so at midday today, the market was down by about 0.06%. So we saw consumer goods take a hit. The index went down 0.19, followed by banking at 0.15, and then industrial goods. So for particular stocks that actually made this move, we saw international breweries go down at about 4.26%. Then also we saw Access, WAPCO, UBase, then it's also in the decline. So this, had led to the midday numbers going down by 0.06 from yesterday's close.
What do you think is driving the sentiments for investors? Is there any market news? Is there any earnings that's been filed in that's made investors want to pull out their funds?
Well, the most prominent news that is going on and which might be of negative sentiment is the election, instability that is going on in the nation. We see that there is socio-political, not unrest per se, but let's just say uncertainty. And this might actually trigger some investors to want to stay away from the equities markets. Not also forgetting the fact that we have still not seen the results for the banking industry. So that news coming out, might also help move the bourse in green. But then so far so good. What we see that might actually have been, or it's actually impacting the markets, is a bit of the socio-political uncertainty in the economy currently.
Speaking of the social political, uncertainty you talked about now, which we all know, we know that the NGX structure has largely changed because now we have more domestic players than international foreign players in the market. Yeah. So that may not have so much as an impact in the equities. So what do you think is happening? Is there a correction from the highs we've seen? Because I don't think domestic players are going anywhere.
Well, yeah, that might actually be it. So the thing is that we don't want to discredit the fact that even in as much as there are not a lot of international players in the market right now, it still might impact, right? So yes, you're right. It might also be a correction because we're seeing marginal movements. So it's not like a heavy decline or a heavy sell-off that we might have seen if there were international players in the market actually exiting our market. So yes.
So what do you think? That was the
anyway, if you look, just double tap the off button.
It's going to be positive, it's going to be negative. What are your insights? Give me an eyeball into this.
Are you ready? So I should start from here.
So most likely,
and I look
we're
at you.
going to see the market close in marginal negative. This is because as of now, we do not see any of the largely capitalized stocks.
Is it good? Everything is good.
Reversing back into positive, but you never can tell.
And so what I want to ask Atibidemi to do is help me move the camera.
But as it's going now,
towards him a bit.
Still see marginal close to the end of the day.
I'm sorry, this camera, let me put it behind him a bit.
Leaning positive or negative?
No, just help me move it to his back a bit.
I will watch out for that, Azizat, and I'll keep you updated.
No, you don't move. Don't move. You adjust it behind you. You should put it behind you.
And now we move to other
So you can move it back a bit.
Asia-Pacific markets, to be precise, where stocks were mixed on Tuesday as investors await regional private surveys for factories.
So you can move it behind him.
In Australia, the S&P
towards this
200 closed 0.21% lower. Investors
even if he moves, I don't mind.
Judo Bank Composite
I don't mind blocking.
Index, which climbed to
Okay, come on, look back camera. No, it won't back camera.
Mark. In Hong Kong, the Hang Seng Index led losses in the region as it fell 1.71% lower, and the Hang Seng Tech Index slid 3.038% lower. In Japan, you see the Nikkei 225 down 0.21% to 27,000 points. In Shanghai, it was up 0.49%. In the Kospi in Korea was up 0.16%, and the Hang Seng Tech Index, as I mentioned earlier, was down 1.71% down. We move over to the other markets in Wall Street. U.S. stock futures fell Monday night following a week during which higher interest rates kept investor sentiment in check. Dow Jones Industrial Average futures rose 0.39%. S&P 500 futures also dipped 0.28%, and Nasdaq 100 futures pulled back by 0.58%. U.S. markets were closed yesterday, that's Monday, due to the President's Day holiday. The Dow fell 0.1% last week, marking its third straight weekly decline. The S&P 500 slipped for a second consecutive week, losing 0.3%. The tech-heavy Nasdaq Composite bucked the trend, rising 0.6%. Those moves came as traders grappled with hotter than expected inflation data, which pushed Treasury yields to levels not seen since November. Traders are worried that stubborn inflation will lead the Federal Reserve to keep rates higher for longer, which could tip the economy into a recession. Now, Brent's crude benchmark opened slightly lower on Tuesday as the U.S. dollar strengthened and traders waited for cues from the U.S. Federal Reserve meeting minutes. Brent crude was down 0.5% at $83.57 a barrel. U.S. West Texas Intermediate crude, WTI for March, which expires on Tuesday, was up 1.02% at $77.12 a barrel. WTI futures did not settle on Monday because of a public holiday in the United States. The WTI April contracts, however, currently the most active, was up 0.68% at $77.07 a barrel. Traders are still waiting the minutes of the latest Federal Reserve meeting due on Wednesday, as data on core inflation has raised the risk of interest rates remaining higher for longer. Now, with China's oil imports likely to hit a record high in 2023 and demand from India, the world's third biggest oil importer, surging amid tightening supplies, all eyes are now on monetary policy in the world's largest economy and biggest oil consumer. Now, gold traded in a tight range on Tuesday as investors refrained from taking big positions ahead of U.S. economic data that could influence the Federal Reserve's rate hike strategy. Spot gold was up 0.1% at $1,842.37 per ounce, while U.S. gold futures firmed 0.1% to $1,852.10 per ounce. Gold prices hit the highest since April 2022 early this month, but have since lost about $120 after a slew of economic data showed signs of a resilient U.S. economy and a tight labor market, fueling concerns that interest rates could stay higher for longer. Minutes of the Fed's latest policy meeting will be released on Wednesday. Money markets expect the Fed to raise benchmark rates above 5% by May, with a peak in rates seen at 5.3% in July. Silver edged up 0.1% to $21.76 per ounce. Platinum rose 0.2%, and palladium was up 0.2%. All three metals were off near one-week highs hit on Monday. Meanwhile, London cocoa futures on the Intercontinental Exchange, ICE, closed high on Monday as tight supplies led to concerns about potential defaults in West Africa, while Robusta coffee and white sugar prices also rose. May London cocoa ended 1.1% higher at £2,144 a ton. It had risen on Friday to a six-year high of £2,155. Dealers said the market continued to derive support from concern about possible defaults in Ivory Coast, with talks of similar supply problems emerging in other major producing countries such as Nigeria. The market, however, has become technically overbought after its strong advance, raising the prospect of a potential short-term pullback in prices. After the break, more updates from the commodities space on African continent. This is Business Incorporated. Welcome back. Nigeria is the second largest producer of tubers in the world. After China, it is also the largest producer of yams and cassava. Welcome back. We move our focus to cassava, and Nigeria is the largest producer of tubers in the world. After China, it is also the largest producer of yams and cassava, producing about 34 million tons of cassava annually, which accounts for 21% of total global production. A tuber of cassava, which was 40,000 naira per ton in 2022, is now up by 50% at 60,000 naira per ton. Joining me to discuss is Daniela Omubo-Dede, analyst at Financial Derivatives Company. Good afternoon, Daniela. It's good to have you join us on the program.
Good afternoon. Thank you for having me.
Daniela, why has the price of cassava increased by twice the food inflation rate of 24.32% that we see now?
Yes, the price of cassava has increased by about 50% since 2022, and the major reason for this is increase in demand. Cassava is the third largest source of carbohydrates in the world, and when compared to other African countries, there's a wide variety of cassava products produced in Nigeria, such as cassava flour, starch, ethanol, garri, and fufu. Now, the demand for cassava is more or less a derived demand, in the sense that cassava is demanded not just for its own sake, but because of its derivatives, which are used as a raw material in other industries. So, for example, if the demand for cassava derivatives like cassava flour and garri increase, it will also increase the demand for cassava, which will invariably push up the price of cassava.
So garri, which we know is local staple food, is a major derivative of cassava and is widely consumed in Nigeria. It is used to make popular Nigerian dish, which recently witnessed the emergence and, well, the increase of other swallow alternatives, or such as plantain flour and wheat, as a result of health and lifestyle choices. What long-term effects does this have on the consumption of garri, seeing that there are alternatives due to health challenges?
Yes, so for garri, when compared to garri, these alternatives such as wheat and plantain flour are actually healthier options, most especially plantain flour, as it is produced from unripe plantain. So it is a better source of iron and it's actually good for our bones. But then in terms of price, garri is relatively cheaper. A custard measure of garri costs about 1,200 naira, whereas a custard measure of plantain flour cost about almost 4,000 naira, which is more than twice the price of garri. So in the long run, the demand and consumption of garri is still going to be on the high side, especially as it will be purchased mostly by young people and low and middle income earners. If you notice, it's mostly the older generation and people trying to be health conscious that purchase plantain flour and include them in their meal plans.
Now, so we know that cassava has lots of uses, used to make in the production of ethanol in Nigeria. But for over 2 decades now, we've seen a shift from the use of sugarcane to cassava. Sugarcane used to be the major inputs for ethanol, but now we've seen that shift to cassava. On the average, about 27 tons of dry cassava chips are consumed daily to produce 12,000 liters of ethanol. Yet, local production only accounts for about 5% of ethanol consumption in the country. What is the reason for this, and what can be done to boost the production of ethanol in Nigeria using cassava?
Yes, so if you look at our import bill, Nigeria actually spends millions of dollars annually on the importation of cassava derivatives like ethanol and starch. And that's very appalling for a country that's said to be the largest producer of cassava in the world. The major reason for this is that our local production is not sufficient to meet our demand. And apparently, these imported derivatives are relatively cheaper than the Nigerian products due to high cost of production and inadequate infrastructure or processing facilities. Now, what the government can do to actually boost the production of the production of ethanol in Nigeria using cassava, there is need for an increased attention. There's need for increased attention in ethanol production in Nigeria. There's actually a lot of untapped potential in cassava industry in the country. So, and also if you look at it, cassava production in Nigeria is also done on a small scale. So when there's a switch towards the commercial production of cassava, as well as the processing of cassava derivatives such as ethanol, we have a situation whereby more jobs will be created, and then in the future we might even be producing a lot of ethanol for exports and get exports in. Thank you.
Also, government increasing attention on the production of ethanol. Can you share more light, or maybe people want to know what the government is currently doing now, why it is inadequate, and what they should do, what you propose they do more to boost this production?
Well, I know that there was some years back, there was the cassava processing industry in Akwa Ibom, but it has not made a lot of progress so far. Because in Nigeria, we have cassava, but there's still a shortage of these cassava derivatives. So we need maybe the provision of better crop varieties and and also extension of credit facilities to cassava farmers, and also the provision of conducive environments. All of these things to serve as an incentive to attract investors into the cassava value chain.
Do you think climate change has affected the production of cassava in Nigeria? Do you think it has had an impact on cassava production?
Yes, I would say so, because cassava is just like the production of any crop. It depends on the seasons and rainfall in the country.
Thanks so much, Daniela Omubodede, analyst, financial derivatives company, for sharing your insights on the program.
Thank you.
Now, moving on to other stories. Global ratings agency Fitch has downgraded Ghana's long-term foreign currency issuer default ratings to restricted default after the country missed the grace period to make a coupon payment on one of its Eurobonds, the second downgrade this month. According to Fitch, Ghana on Friday missed making the $40.6 million coupon payment on its $1 billion 2026 Eurobond as part of the suspension of payments on selected external debt that the government announced in December. Last week, the government, which is battling a once-in-a-generation economic crisis, said it has finished a domestic debt exchange program with 85% participation of eligible bonds, or 64% of the 130 billion cedis originally slated for restructuring. It has now turned its attention to reaching an initial agreement on restructuring about $29 billion of external debt, a condition for securing a $3 billion International Monetary Fund loan. Now, from March the 1st this year, Ethiopia, Burundi, and Niger will receive zero-tariff treatment from China on 98% of their taxable items, and that's according to China's Customs Tariff Commission of the State Council. The move is aimed at strengthening China's friendship and cooperation with African countries, facilitating the development of the least developed nations, and fostering an open global economy. China had pledged to provide tariff preferences for least developed countries at the 8th Ministerial Conference of the Forum on China-Africa Cooperation held in Senegal last year. These benefits will gradually be extended to all other least developed countries that have established diplomatic relations with China in the future. And that's it on Business Incorporated. Thanks for watching. I'm Will Ibon. Bye for now.